Gold futures losing their modest early gains as the US dollar index rallies to a 4-week high. We'll get Jim Wyckoff's thoughts up next. Jim, thanks for joining us before the start of the long weekend.
Always nice to see you, Daniela.
Jim, it seemed that gold was getting a bounce back Friday and some help on Monday, but things have taken a turn this Tuesday. What's happening in the markets?
Yes, indeed, Daniela. The past couple of days we saw some short covering, some bargain hunting after last week's nearly 3-year low. The bears are still in technical command. We're seeing the dollar index a little bit stronger on Tuesday morning, so that's put some downside pressure on gold again. So far, it's just a short covering bounce. The bulls have a lot of work to do in the near term to suggest that the gold market can sustain a near-term price uptrend.
Jim, do you think we saw an overreaction in the gold market last week?
Yes, I do. In fact, history shows, Daniela, that in major bear markets and major bull markets in commodities, they always overdo it. They overdo it on the upside and they overdo it on the downside. And history will once again show that whatever low we put in the gold market, and we don't know what that is yet, but it will have been overdone on the downside, and then it'll rebound and embark on another price uptrend.
So, Jim, this week we have the U.S. 4th of July holiday with U.S. markets being closed. So we expected a quieter week, but we have jobs numbers coming out on Friday. So a mixed bag here. What can we expect?
Daniela, not only do we have jobs numbers on Friday, but we also have central bank meetings in the UK and in the European Union on Thursday. So it is a very important week as far as data goes. The gold market will react to Friday's U.S. jobs data and probably to the Thursday meetings also. If we get a stronger U.S. jobs report, that's probably going to be a little bit negative for the gold market. If we get a real strong jobs report, that could send the market to new lows.
When you say we're heading lower, we've heard talk of $1,000 gold. Could we hit that level?
Well, we certainly could, Daniela. The very important Fibonacci 50% retracement level of the price move from the 2001 low to the all-time record high we scored several months ago comes in at about the 1088 level. That's the key level I'm watching, and that level is basis the nearby COMEX futures.
On that note, let's look at your Wyckoff market rating system for the week. Jim, what grade are you giving gold and silver?
Daniela, I'm giving both gold and silver a 2, fully in the bearish camp. For the gold market, we see solid technical support at the last week's low of 1179.40, and that's basis the August contract. We see solid overhead resistance at the 1300 level in August gold. Silver market, September silver, see solid support at 1817. That's the recent low. Solid resistance at 21.
Jim, thanks for your thoughts. We'll see you next week.
All right, bye-bye.
And thanks for watching Technically Speaking with Jim Wyckoff. You can email us at newsfeedback@kitco.com or follow us on Twitter at Daniela Camboni. Thanks for watching.